What's good, everybody? Welcome to Good Fortune University, and thank you for tuning in to our YouTube channel. This week, we're going to be focusing on gold from a technical and economical standpoint. Make sure you like, comment, and subscribe if you enjoy the value that we're putting out. Beat me there, don't meet me there. I see you on the chart. All right, y'all. So, looking at gold this week, I'm going to keep it super funky and simple for you guys. I'm going to break down both from a technical and economic standpoint of what I'm looking at, especially because we have a heavy week full of data this week. Looking at the weekly chart, what I notice here is that we are super bullish, and this is what I call my weekly reversal point on the weekly chart. So, what that tells me is, in order for us to be bearish on the weekly, we would have to actually break this part to the downside, for us to start taking sales from a weekly standpoint. Looking at the daily chart, we are overall bullish as well, and again, we have our daily reversal bullish point. What this tells me as well is that if I wanted to be bearish on the daily, we would actually have to break that daily standpoint. And here is also my daily trend line. I'm going to actually change this color to orange. That's how I know this is my daily trend line as I go lower down on the charts. What this tells me is that I can either see price push up, we close above the highest point price is reached, and then look for a correction, or depending on how news and everything comes out this week, we might can see price drip right back into this daily trend line, and then we look to actually buy price up. Going to my H4 as well. We are bearish right now on the H4. So my weekly and daily is bullish, but my H4 is bearish. And let me explain to you why I see that we are bearish on the H4. Now, taking our polyline, and we can start from this higher low. Price made a higher high, price made a higher low, price made a lower high, and then made a lower low. So we pretty much had a failure swing here by just an inch. A failure swing is when price fails to make a new higher high or a new lower low. I want to explain this to you guys as well. So let's say we're bullish, right? Price creates a higher high, higher low. But again, price fails to create a new higher high. It creates that higher low, lower low, and lower high, and continues, right? So again, price creates a higher high, higher low, creates a lower high, which is a failure swing because it fails to make a new high, a new higher high, creates a lower low. And sometimes what we want to see is price make a lower high and then make another lower low and catch that continuation to the downside with the proper candlestick confirmation. From a bullish standpoint, all right, price is bearish, lower low, lower high, creates a higher low, fails to make a new lower low, creates a higher high. We will be looking for that new higher low to do a continuation, and see how candlestick prices between this higher low and higher high to continue into a bullish trend. So that's what that is. Now, going back to the charts, we are currently right now bearish on the H4. So my weekly is bullish, my daily is bullish, my H4 is bearish. Now, what I want to see is price to break above this highest point that price has actually reached. That will make our H4 time frame bullish. Once that is bullish, then we'll see some type of resistance, hopefully, to go ahead and look for a pullback. My pullback levels in my area of interest would be once this break, either this level here or this level. So I would have two areas of interest to be looking for to take that trade. Looking here on our hourly is bullish, even though our H4 is bearish. So here's where we became bullish at. Again, we had that lower low made, we had this lower high made, then we had a higher low, that failure swing that I told you about, a higher high, higher low, and we're looking for that new higher high. So I will be looking for my entries in between the higher high and the higher low. We have three entry points: market structure retest, fair value, or order blocks. Two things can happen. And remember, Monday is Columbus Day, so the banks are closed. So we will have low volatility in the market. But as we're looking at things this week, Tuesday, Wednesday, Thursday, Friday, we have heavy news, and we're going to go ahead and dive into that. But as of right now, I'm going to be looking for either a break above this higher point reached to go ahead and start looking for that correction to take some short-term buys until we hit news, or for price to just stall because we do again have news coming out Tuesday through Friday, which we're going to go ahead and pull right to in a minute. And price coming to actually retest this level to go up. This will be my take profit 1, and 4100 will be my take profit 2. Now, when news does come out, news does tend to respect our daily and weekly levels. When news comes out, I'm going to be seeing if price is going to come down here and respect our trend line or break past the trend line to respect this daily level or this weekly level, depending on how volatile news is going to come out this week. I told y'all I'm gonna keep it super funky with y'all this week. I'm gonna give y'all everything y'all need to be successful when it comes to everything that's coming out this week. So let's go ahead and look at the news we have coming out. And again, you can screenshot this, and this could actually be your blueprint for the week, right? Every week, gold tells a story, and the news writes the script. This week we've got inflation data, central bank speeches, and USD strength battling gold momentum. So let's break down what really matters this week and how you can apply this to the market. Now, coming in hot on Tuesday, when Jerome Powell speaks, gold tends to listen. This is a big event coming out this week. Powell controls the market's mood. If he sounds hawkish, talking tough on inflation and hinting at higher interest rates, gold will actually bleed. If he sounds bearish, showing concern for growth or softer inflation, gold could explode upward. Watch his tone on inflation progress, rate stability, policy normalization, and even jobless claims. These are some key things. How speech decides if the USD strengthens or weakens, and that's gold's direct mirror. Now, coming in hot on Wednesday, if the factory slows down, gold gears up. Weak manufacturing equals a weaker economy. Weaker USD, we all know, is bullish for gold. When we have strong numbers, this equals confidence in the economy, which could be bearish for gold. It's not a top tier report, but it sets the tone for how investors feel midweek. If the data disappoints, gold may start a pre PPI rally. Inflation isn't just a number, it's gold's oxygen. We start understanding the cost before they actually hit the consumers. Rising PPI equals hotter inflation. The Fed may stay hawkish, which could cause gold to go ahead and start to price bearish. Falling PPI equals a cooling in inflation, which gives us a weaker USD and gold could explode up. Expect volatility. Gold reacts fast when we have inflation data hit. If PPI drops while Powell tone stays soft, that's a double bullish combo for gold. If consumers stop spending, gold stop winning. When we dive into core retail sales and retail sales data, consumer spending drives 70% of US economy. Strong sales gives us a strong economy, which gives us a bullish dollar, which is actually bearish for gold. When we have weak sales though and weak spending, this is a slowdown. This is fear, which is also bullish for gold. This data pairs perfectly with PPI together. They reveal inflation and demand. Now, if both of these pieces of data come in weak, expect gold to spike fast. So be cautious. That's when we can start getting those retests at those key daily and weekly. When unemployment rises, gold gets a paycheck. When we have higher unemployment claims, this equals a weaker job market. This is a signal for potential rate cuts, which is bullish for gold. We have lower claims. We have a strong economy, which is bearish for gold. Weak labor equals weak dollar, which means we have a strong gold. When we combine our labor market with PPI direction, this can kind of help us get ahead and try to understand what we can expect when CPI rolls in the following week. FOMC member Waller, who speaks and echoes Powell's tone. If both sound hawkish this week, expect USD to gain and gold to retrace. If either hints at easing, that's confirmation of a gold breakout setup. Back to back bearish tones plus weak data equals gold rally continuation. When central banks talk, commodities walk. Friday, we have Bank of Canada Governor Macklem speaks. Now, this is a low direct impact to gold, but here's why you should pay attention to it. Focus on any talk about global slowdown or commodity price stability. This week, now, when it comes to data, it's not all clean and cut. This is why I said I'm gonna give y'all a lot of land. Mixed data scenarios can be a thing. Let's say we have Powell speaking hawkish on Tuesday, which could boost the USD temporarily, but then Thursday PPI comes in lower than expected. This shows inflation cooling. Retail sales come in strong, which shows consumers are still spending, and unemployment claims tick up slightly, signs of mild labor weakness. Waller speaks Bearish later talks about being data dependent and patient. This could mean when it comes to gold is one, conflicting signals. Hawkish Powell initial USD strength, which equals a short-term pressure on gold. Lower PPI disinflation signal equals a medium-term support for gold. Strong retail sales keeps USD strong but offsets gold's upside. High jobless claims and a bearish Waller rebuilds gold sentiment. No clear direction trend early in the week. Choppy, indecisive gold behavior. Now, use this as a cheat sheet to build going forward, but keep it in your notebook so you can understand how these things impact from a clean and cut and a uncut standpoint, because everything is not perfect. The markets is not even perfect. So with that being said, thank you guys for tuning in. I hope you guys get some value out of this and tune in to me next Sunday. Thank you so much. Like, comment, subscribe,